I'm Diego Sanchez, COO of HousingWire, and this is 10-Minute Talks. My guest today is Daryl Fairweather, Chief Economist at Redfin. Daryl, welcome to 10-Minute Talks.
Thank you for having me.
It's so great to have you on, and it's really timely. There's a lot going on with mortgage rates and interest rates and the housing market. Before we dive in, could you give a 60-second introduction of yourself and your work at Redfin?
Sure. My name is Daryl Fairweather. I'm the Chief Economist at Redfin. I lead housing market research. What that means is that we look into what's going on in the housing market, what is changing in terms of the conditions in the housing market and the economy, and we try to deliver that information to our agents, to our buyers and our sellers, to our company leaders, and to the general public. We're also interested in researching more long-term trends in the housing market, like why is housing so unaffordable? How did we get here? What are the underlying problems? So that basically covers the kind of research that we do. Before working for Redfin, I was a senior economist at Amazon, where I was working on employee engagement. My background is in behavioral economics, so I always kind of bring that psychological lens to the economic research I do on the housing market.
Yeah, tell me about that move from Amazon into the housing market. That's an interesting move.
Yeah, I mean, I had a background in the housing market before. I was studying to become an economist during the housing market crash, and that colored a lot of my education on economics. My first job as an economist was a research assistant for the Boston Fed, studying the underlying causes of the foreclosure crisis. And then that got me interested in behavioral economics, because a lot of the reasons why we entered into that recession had to do with the psychology of the way that people thought that the price of homes would keep going up forever, even though nothing can go up forever. So it definitely got me interested in economics to begin with, the housing market. And I think the housing market is really just a great microcosm of the economy and the way that people make economic decisions.
We have an ongoing debate between our editor-in-chief, Sarah Wheeler, and our lead analyst, Logan Mohtashami. Sarah thinks there's a mortgage rate lockdown. Logan doesn't. Where do you fall in this debate?
I think that it matters in the sense that if you are comparing a 3% mortgage that you have on your current home to the potential 7% mortgage you would get on your next home, that is a big leap to make. But I also think that eventually people are going to detach from these mortgages one way or the other. Like if you have a huge credit bill and you need to reconsolidate your credit, you're probably going to look back at your mortgage and figure out a new solution there too. So, and also like if people need to move for whatever reason, if they're getting married, if they're getting divorced, if they're having a kid, if they need to move into an elder care facility, there are just so many other factors that go into the decision to move other than just money. So I think that like the money issue of the mortgage rate lock-in effect is real, but it may not be continuing to be the most important issue when it comes to the decision to sell a home.
And we may have a chance to put the theory to the test. What's your take on Chairman Powell's statement coming out of the Fed meeting yesterday?
It's nice that mortgage rates fell. I think that he definitely sounded more dovish, more optimistic about the path for inflation, and the market seemed to like that, and interest rates came down. I think there's still kind of a disconnect between what the market heard Powell say and what he probably intended the market to hear. And that might result in even more volatility down the line as markets and the Fed kind of get on the same page, because eventually they will have to get on the same page. But yeah, in the short term, it's always nice that mortgage rates fall. We've had a couple of weeks now of mortgage rate declines, which, you know, every week we go where rates are going down instead of up is a good thing for the housing market.
Could you unpack that a little bit more, that disconnect that you think might exist between what he said and what the market heard?
Yeah, so I think the Fed was signaling that they would do three rate decreases next year, but the market is pricing in more like 6. So if the market is anticipating that in the future rates will fall and that doesn't actually happen, then current rates would go up to reflect that like realization that maybe they were being too optimistic. But the other thing could happen where the Fed gets on the same page as the market, and then, you know, the rates don't need to change at all. So I think that there's just still kind of uncertainty about where inflation will go, and it just needs to be borne out before we decide if the market is right or the Fed is right.
Some of that volatility that we've seen over the past really year and a half, 2 years, has been priced into that spread between treasuries and mortgage rates. Do you think that as those views of the market and the views of the Fed get more in alignment, we could see those spreads decline a little bit?
It's possible. I mean, there's a lot that goes into those spreads. The term obviously is different for a mortgage versus a 10-year treasury, and there's like a prepayment risk on mortgages. So I think I don't really have a great outlook on how that spread might change, just because there are so many different factors that go into it that could have a lot of volatility in and of themselves.
Well, rates are down about 40 basis points since yesterday, which is great. I think that will help the housing market in the spring. Where do you think rates go from here?
When we put out our predictions last week, we said that rates would fall to 6.6% by the end of 2024. But, it's looking like we're getting really close to that already. I think
we're already there today.
Yeah, exactly. So I guess the real question is, do I think rates have more room to fall? And I think that is possible. But it kind of depends on where inflation goes from here. If it's smooth sailing, then I think that we could fall like another 50 basis points. But if there are unforeseen challenges in the economy and inflation, then they might prove to like kind of settle where they are right now. The way rates move is that like the changes kind of tend to happen all at once. And it doesn't really mean that we can expect more declines moving forward. It might just mean that those declines have now been baked in to market expectations already. So yeah, that's a roundabout way of saying I think it's possible that rates could fall another 50 basis points, but they also could hold steady. It's all on the table.
Do you think that you'll do a reforecast at some point in the next couple of months, depending on what happens with rates and other factors in the housing market?
Yeah, we might be due for one. I think it's probably a little bit too early. We literally just put out our predictions last week. And although rates have changed, like we were kind of going into it on the optimistic side that we thought rates were going to fall. Now, I think what is a bit surprising is they fell a lot earlier than we were expecting. But like I said, it doesn't guarantee that they're going to continue to fall. So I think we're probably going to wait a little bit to see where rates are in January, where inflation is, where the economy is before we commit to a reforecast.
All right. So you'll be a featured speaker at our upcoming event, The Gathering, which I'm really excited about. It'll be great to have you on stage. That event is going to take place right in the middle of the traditional spring home buying season. What are you expecting the housing market to look like this spring? Is it going to be better than this year, worse, the same? What are you thinking?
I think that there'll be more buyers out there and more sellers. Now that rates are down, it may be that there are actually a larger increase of buyers than there are sellers, which might result in some competition heating up. But I think it's probably a little bit early to tell. Even though rates have fallen recently, if we're comparing spring of 2024 to spring of 2023, rates were lower than they are right now in spring of 2023. So I don't know if we can really expect a huge improvement. I think for the whole entire year, we're probably going to have about 5% more home sales than we did this last year, which is definitely a welcome improvement, but it doesn't get us back to it being a good housing market for, people who are in the industry and make money off of homes getting sold.
What are the key metrics that you're looking at over the next couple of months as we lead into that traditional spring home buying season, which are going to tell you, oh, this is going to be really good, or, oh, maybe this isn't going to be so good?
Yeah, we have a Redfin demand index that I'll be paying attention to. It hasn't really popped on recent declines in mortgage rates, but that's probably because not a whole lot of people are looking to buy a home this time of year. So if that starts to pick up in January, then I would start to be more bullish about demand for the housing market. And that index is based on things like the number of users that are looking at Redfin and that are requesting tours, some of those internal metrics that we have that are a bit earlier indications of appetite from buyers.
I'm going to have to check that out, and we'll put a link to it in the show notes.
It's always in our weekly report. If anybody wants to go, if you go to Redfin News, you can subscribe to our weekly reports, and it's always in there.
Perfect. Well, Daryl, thank you so much for joining me today. Timely conversation and really interesting.
Yeah, thank you for having me.
Thank you so much for watching this episode of 10 Minute Talks. If you want to stay up to date on all things housing, don't forget to subscribe to the channel and drop a like and a comment below if you enjoyed this video.